welcome back. You're watching The Money Show on ET Now. Here's a very interesting product that I'm sure you may have seen quite often, and that's guaranteed income plan, something that offers you cover, that's life cover, as well as a guaranteed income. Sounds pretty interesting, and Bajaj Allianz has come out with a product in that segment. It's called the Bajaj Allianz Life Flexi Income Goals. Let's talk about the product. Let's differentiate it as well, pit it against versus ULIP, which as well does tend to have this investment aspect plus an insurance aspect. We have with us Dheeraj, Sehgal, the Chief Distribution Officer for Institutional with Bajaj Allianz Life Insurance. Dheeraj, many thanks for joining us today on The Money Show. To start off with, if you could just introduce this product to us. Life cover plus guaranteed income does tend to sound a little similar to ULIP, which also offers you a return plus life cover.
Yeah, so first of all, Mubina, thank you so much for having me on the show. Guaranteed products, as the name suggests, they offer you a guaranteed sum of amount at the maturity of your policy. In simple terms, in layman terms, what it means is that, regardless of what happens to the interest rates, as you would have seen that after pandemic, the interest rates have been going down. Our bank deposits are not, giving us the same amount of return that we were getting earlier. Our fixed deposits are also not yielding us the same amount. So you always stand, some kind of a risk that, if tomorrow the interest rates drop, what is going to happen to the life goal for which I have started saving or for which I kept this fixed sum of amount aside. Guaranteed products from life insurance companies, they address that segment of your life goals very, very aptly. What they do is, let's say if you are a customer and you're buying a guaranteed insurance product today, you will be given and a rate of return which is defined on the basis of your age, the number of years that you are planning to invest for, and the maturity. So on the basis of these combinations, you will get a rate of return. And after that, let's say you decide to stay for 15 years, regardless of what happens to the yields or the interest rates during that term of 15 years, you will continue to get the guaranteed returns what are shown to you at the time of buying the policy. How it helps you is that, if let's say that you are saving for a life goal, or some of our investor is saving for child's education as a life goal, and that goal is 15 years away from here. And on today's calculation, that you would need an amount of 15 lakh rupees or 5 lakh, 20 lakh rupees on that day. Right? It helps you, guaranteed product helps you to plan your savings starting today, because that the maturity amount or the amount that you get at the end of the policy term will not alter or vary on the basis of any kind of volatility, either in the stock markets or in the interest rate regime or the bond yields. So that's what the guaranteed product does.
Word itself is pretty self-explanatory when you say that there's a guarantee of sorts that is being offered. Okay, Dheeraj, when you say guaranteed returns, it obviously is fixed, right? So what sort of rate of return are we looking at? How is this guaranteed income calculated post the premium payment period?
See, as I mentioned, Mubina, the guarantee is calculated on certain variables, and those variables are the age at which the customer is buying, how long is the customer planning to stay invested. So, if you stay for a longer term, the returns would, or the guarantee would surely be better. And the third thing, which is what is the rate which is being offered on the basis of these two combinations, is what decides what the guarantee is going to be. So my recommendation in all such cases where customers are looking at guarantees is always to look at an associated goal. A goal which is fixed in nature, where that you don't want to go wrong with that particular goal. And usually, goals related to retirement, goals related to child education are typically the traditional goals are the ones where we don't really want to take any kind of chances, because we know that there's a defined time at which you want to meet those goals, and you need a defined sum of amount. So for those life goals is where we recommend that you buy the guaranteed plans and stay as long as you can, decide your maturity amount and start investing on the basis of that today. Of course, it also depends on your present saving affordability. But I think like any other prudent saving plan, it is important that you decide on your life goal. What is the amount of money that you're going to require at that time? Start as early as you can, stay as long as you can, or at least till the time you reach that life goal stage.
The fact that your plan is also a flexi income plan. I understand that the payout structure, it depends on the policy holder. So what are the options available for the policy holder? I mean, how does it vary, the payout structure?
So flexi income goal plan, it gives you an option of taking the lump sum at the end of the term plan, or looking at today's scenario where there's a huge amount of financial uncertainty. What is also happening is that there are a lot of people who are saying that I have the savings today, but I want the income to start happening for me much earlier than waiting for next few years. So you can decide to take the income as early as the next month. You can decide what is that amount of income that you want to draw from your product. You can decide how long you want to draw that income. Of course, all these factors, they depend on what is the amount of money which has been invested. So it gives you complete flexibility, as the name suggests. It gives you complete flexibility in terms of whether you want to take the lump sum at the end of the policy term, or you want to start taking income during the intermittent phases of your policy term. So that flexibility is allowed here for the customers.
Okay. Premium costs. Now, yes, I know you mentioned it will obviously depend on age, health, etc. of when the policyholder is opting for, this plan. But, from a regular, non-guaranteed, bonus-based traditional life insurance plan, how will the premium differ for, flexi income guaranteed plan?
So for all savings plans, Mubina, whether it is guaranteed or it is bonus linked or it is unit linked, there is no defined premium rate as such, because they are saving plans. They are largely dependent, or I would say only dependent on the life goal that you're saving for. What is the amount of money that you want for meeting that life goal, and what is your present saving capacity? These are the determinants which decide the premium amount. As I said that, if somebody says that for my child's education, if I'm doing that in an Indian university and I need 10 lakh rupees, if I want to send the child out to a foreign university and the amount required is much higher, that defines the life goal. To reach that life goal, if there is a guarantee which is available today, or you are depending on your appetite, you're investing in a guaranteed savings or a linked savings plan, you will decide what is the amount of saving that you need to do on a yearly basis to meet that goal. So the premium is purely dependent on the amount of money required to meet that goal, and the amount of money you can save today to achieve that.
Okay, all right. So, like Dheeraj mentioned, at the beginning as well, that you need to have a certain goal for which you would be opting for the plan, and everything else accordingly is calculated. The amount of money as well, the premium basically that you will have to save and calculate and pay for the plan. It'll all be dependent and hinging on that. Dheeraj, many thanks for joining us today on ET Now, and sort of introducing the Bajaj Allianz Flexi Income Plan for all of our viewers. Okay, well, with that, we're out of time on this edition of The Money Show. You can catch the episode on YouTube, on ET Now's YouTube page. Don't forget to subscribe. For now, it's a goodbye.